We've been talking so much about the electric vehicle sector and new companies debuting at an early stage, getting these huge valuations. It suggests, among other things, there's just a scarcity, it would seem, of publicly traded options for people to express this view of which way this industry is going to be going. What does that mean if that's the case? What would that mean for returns? Do you feel as if there is a good enough group of opportunities in terms of investable companies that can kind of both deliver returns and also those goals?
Look, I think you're absolutely right. There's a risk here that there's a small number of kind of clean tech, climate solution opportunities in public markets, and they attract a lot of capital, as you rightly pointed out with Rivian in the last few days. The challenge is that we actually do need to see earlier stage capital going into the commercialization of technologies and of the scaling up of some of these solutions. So there's an important role for sort of the pre-IPO market, for growth capital in the private markets to play here. And also, frankly, there's a role for government to play. If you look at what was part of the Biden administration's infrastructure plan that passed recently, you've got $3 billion in there for advanced nuclear reactor program research, right? That's something that the private sector is just frankly not going to be able to fund, given the return profile on those types of technologies, unless we move towards sort of modular nuclear reactors of the type that Rolls-Royce and others are developing. So clearly, government's going to have to play a role for some of these higher risk investments. But outside of that, absolutely, our clients are turning to us and saying, where are the climate solutions opportunities? And so we're having to be judicious in finding those both in private markets and selectively in public markets, so we don't see a repeat of the clean tech bubble that we saw a decade or more ago.
Are we at a point, Jonathan, where ESG, environmental, social, and governance directed investing is being kind of overtaken by the climate priorities, and it becomes mostly about clean energy and things of that sort? And does that matter if it's the case?
Look, I think you're absolutely right. It's a really important point. The focus on climate is just so clear, and that's partly because of the time horizon, right? By 2030, we've got to see about a 45% reduction off 2010 levels of emissions, and current commitments that have been made up in Glasgow might be getting us towards 16, 17, 19% reductions. So the pace of change over the next 9 years is huge, and that means that we're kind of rebuilding the global economy at a rapid pace. And so, rightly, ESG is very focused on the E aspect of that, because people can see the impact that it's going to have on companies in quite a short to medium term. But we can't forget that just being strong on E, just being part of the transition from a net zero perspective, that's just not enough. At the end of the day, if you work at Tesla, if you work at Rivian, as an employee, the social aspect does matter. Issues like diversity, equity, and inclusion still is a lot that companies can be doing to show leadership on those topics. And of course, there's plenty of companies that could improve their governance. So we can't forget the S and the G. But you're absolutely right. The focus and the pressure right now is undoubtedly primarily on that transition and the environmental side of things.
You mentioned as part of the infrastructure bill, the nuclear energy priority, the nuclear energy spending that's in there, and perhaps that's best led by the government. Are there other things in this bill that you feel like could be catalysts for different parts of the kind of energy economy on the grid or elsewhere in battery technology, or anything else that you feel as if might be sped up because of it?
I mean, I think the hydrogen hubs and demonstrations, I think there's about $9.5 billion allocated to that is going to be really important, because if you look at things like how do we get to green ammonia, how do we move to hydrogen-powered steel manufacturing, what do we think about transportation for aircraft? Interestingly, the US has indicated at Glasgow an interest in signing a global agreement to decarbonize aviation by 2050, and that's going to need probably hydrogen to play a role in that. So I think the support for trying to scale up and to bring the cost curves down for hydrogen is very exciting. And that's something that is probably quite investable, because of the ways that you can participate in that, either through some of the commodities that are part of the catalyst, or whether it's through the engineering companies and ultimately, the energy players that are going to build the infrastructure. So that's an area that we're watching very carefully on behalf of our clients as a space that is likely to be critical over the next decade, and one that may actually be investable.
Shepard Smith here. Thanks for watching CNBC on YouTube.